What's going on, everyone? We're going to take a look at Tesla. Tesla continues to get absolutely destroyed and obliterated. Now, I'm not going to get into all the nitty gritties with Elon Musk and Twitter and what possibly could be going on. We had CPI numbers come out this week. We had Jerome Powell pretty much tell us the same thing we've already known. It's coming to the end of the year. No need to really keep your foot on the gas. If you find a setup, you find a setup. If you don't, you don't. The last thing you want to do is scramble around looking at every single stock underneath the face of the earth here, trying to find a good setup. If you get a setup, you get a setup. But if you kind of look at what Tesla's been doing the last 2 weeks here, all we have been doing, even on any type of green day or any type of intraday pop, is we've been getting rejected. Ever since we got rejected going back here to November the 30th as well as December the 1st, when we briefly reclaimed the 20-day moving average on a daily time frame and we lost it, all we've done is just power trend back down. If you kind of look at this linear regression here, we had a big line in the sand. Our previous 165.80 was a big level there. We breached that yesterday, broke below this channel level, broke below the Bollinger Bands, and today we had some more continuation on that downwards flush here. Not by much, but by a little bit. If you kind of look at the bottom wick here, 156.22 all the way down to around 155.31. Now, could Tesla be due for a dead cat bounce? Sure. If it does, when and if it does dead cat bounce, will there be an opportunity for a trade? Yes, but experienced scalpers only. Just because we get a dead cat bounce, even on a stock that's been getting absolutely pounded the last 4 months here, does not mean that it has to give you continuation or follow through all day, right? So experienced scalpers, you need to use the smaller time frames, the 1 hour, the 30-minute, the 15-minute, the 5-minute time frames, kind of find those intraday channels, get in, get green, and get the hell out of the trade. Make sure you guys are taking profits. The last thing you want to do is think that, hey, we're going to dead cat bounce. This is the bottom, perfect opportunity, to kind of go long and just sit here and let me swing trade this, for it to only go up half a day and then next week it's completely getting destroyed, right? So two-sided trade here on Tesla. What I'm looking at here, we are below here. We do not on the daily time frame have any bit of support here. So anything below 155.31, I will take my opportunity at a short scalp here. Now I'm gonna, be very cautious here because I could get trapped out of that short position. But 155.31, today's lows, that's my entry for a short. Now, if we do get a dead cat bounce, I would at least like to see it try to take out a previous day high before I look to go long. Right as of right now, that's going to be sitting at a price of 161.51. If I kind of pull up the weekly time frame to kind of see exactly where we are at, you can see today this, and obviously today's price action is included in this weekly candle, but we just breached, guys, and we are actually closing below the 200-day moving average on the weekly time frame. This is, big deal here. Anytime a stock loses its 200-day moving average, it's going to be that much tougher if Tesla can't, within the next 1 to 2 weeks, reclaim that 200-day moving average. The longer time you spend underneath the 50 and 200-day moving average, the harder it is to kind of get out of its own way. If you kind of look at when we lost the 50-day moving average on the weekly time frame, that goes all the way back to September, guys. This red line here is when we had this big red engulfing candle, and we actually closed at a price of 273, which is about 120 points higher than where we stand today. And you can see for the past 3 months, we have not even came close to attempting to get back over that 50-day moving average. So we do not want to stay below the 200-day moving average for long, because the longer we stay under the 200-day moving average, the bigger opportunity we have to kind of bounce and get rejected at the 200-day supply and then kind of continue to go down. So let's hope that this is an overshoot. We do have a Bollinger Band sitting at around 140. Hope that it doesn't get down there, but going into next week, okay, because we've only got 2 days left of the trading week, and obviously this candle's not going to close until the end of the week. But next week, if we do lose 155.24 or whatever new low it is, whether it be tomorrow or Friday, whatever new low below 155.24, if we confirm that next week, then our maximum potential for a price target is 141 on the short position, okay? But we need to wait for next week. Now, let's hope that this is an overshoot, and then the bulls kind of trap these shorts and reclaim. If we can reclaim on the weekly closed back over the 200-day moving average, then I would be looking for the dead cat bounce next week. I'll look for a dead cat bounce if we close over 162.80. My price target for potential is around 175 to 177. I hope that helps, kind of gives you guys a little bit of context. Again, let me kind of slow this down. Let's wait for this week's candle to close. Whatever this week's candle's low is, if we confirm that low next week, you take the short position. That's what I'm going to be doing. I'm not telling you to do that, but I'm telling you that that's what I'm going to be doing. If we do close below this 200-day moving average, if we confirm the lows next week, I'm going short. My price target is going to be around 140 to 142. However, if we do get some sort of dead cat bounce between Thursday, which is going to be the 15th, and the 16th of December, and we reclaim the 200-day moving average, then I'm going to be looking to dead cat bounce Tesla next week. And the price that I'm looking for is to get back into the 170s going into next week. That's how I'm going to play Tesla. You can play Tesla however you want. That's just my technical analysis. Again, we are on another leg down here. I would be expecting some type of dead cat bounce, and I can see a 2-3 week dead cat bounce into a price of close to 200. Now, I know that that doesn't seem like it's feasible, but Tesla can really get going, and especially on a dead cat bounce, it can put in a $10, $15 candle in a single day. I hope that kind of helps you guys. If you guys want to trade with me, make sure to join the Discord. Also, like, comment, and subscribe, and I'll see you guys all in the next video.